It's Friday, the 24th of September 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
I love Fridays, Michael. Good morning.
This morning, the country's big lenders warn on property prices and hint they might take action to cool the market. That's our main story. Also, the local share market surges on good news, a record week for the vaccine rollout, and the corporate watchdog warns about pump and dump schemes. Then stay listening for Sean's chat to Michael Pillemer from PPS Mutual about the beleaguered life insurance sector and how it's changed since the Royal Commission. But first, the Commonwealth Bank boss is worried, Sean, about the speed at which property prices are rising, saying banks should act to cool the market.
It's pretty incredible when the country's biggest lender that makes money by providing finance to home buyers calls for a slowdown in the market. Where else does that happen? But that's exactly what Matt Comyn did yesterday, appearing before a House of Representatives hearing. He's not worried about today, but he's worried about 12 months' time and beyond if things stay as hot as they are. Mr. Comyn said there'd been more loan applications than usual despite the lockdowns, and alongside higher house prices, that could well and truly be a problem. He was followed by ANZ boss Shane Elliott, and he repeated what he said before, that he's worried that the rise in house prices could trigger social problems in the community. ANZ's noticed borrowers are extending themselves, Mr. Elliott said.
And of course, on Wednesday, the Reserve Bank said it was worried as well.
It did. Assistant Governor Michelle Bullock said there were concerns about future indebtedness if things continue as they are. Though the central bank has made it pretty clear it's not about to lift interest rates to actually prick the bubble. Keep in mind, amidst all this, core logic figures show that house prices are up on average 18% over the past year and have risen at 11 times the rate of wages growth.
So Commonwealth Bank, ANZ, both talking about it. Will those banks and the other lenders do anything about it?
Commonwealth Bank already has. It's lifted what it calls the benchmark floor rate to 5.5%. That's the rate the bank uses when judging whether a borrower can afford repayments in the future. 5.5% is about double the variable interest rate at the moment, and the bank wants to know people taking out loans right now can pay that sort of interest rate into the future. While the banks want to make more home loans, that's their business, it certainly isn't in their interest if borrowers hit the wall in 2, 3 or 4 years' time. There are also natural stabilisers in the market at the moment which will take some of the heat out of it. Housing affordability has fallen because prices have risen so much. And with a bit of luck, that will cause the heat to come out of the market, notwithstanding we still have ultra-low interest rates.
Yeah, big issue, one to watch over coming weeks and months. So what have the markets done over the last 24 hours?
This week has been all about central banks, Michael, and what they think on interest rates. Overnight, the Bank of England said the case for higher interest rates appeared to have strengthened and it's pushed up its forecast for inflation. Now remember, 24 hours earlier, the Federal Reserve was a little more upbeat about the economic outlook for the US, and some members of the board of the Fed think interest rates should actually rise next year. Norway's central bank lifted rates yesterday. That's one of the first developed nations to do so. But Australia's Reserve Bank earlier this week said it was committed to keeping rates on hold, while the Bank of Japan did the same. The central banks have been driving the mood in global financial markets, no doubt about that, and the upbeat assessments of economies have pushed bourses higher. Overnight, Wall Street surged with the major indices up more than 1%. The Stoxx Europe 600 was up 0.9%, notwithstanding London's FTSE falling slightly. Yesterday, the local market closed up 1% to 7,370 points. That's 3 positive sessions in a row after Monday's sell-off. Importantly for the big Australian miners, the price of iron ore has pushed back towards $110 a tonne. That's nearly 20% higher than where it was a few days ago. There was pent-up demand on the back of holidays in China for iron ore, as well as relief that the country's largest property group, Evergrande, managed to make its bond coupon repayments yesterday. Oil prices were also up overnight. That's not great for petrol prices, and gold fell back below $1,750 an ounce.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. It's been a record week for the national vaccine rollout with 2 million doses administered over the past 7 days. That's pretty incredible. As at yesterday, 74% of adults over the age of 16 have had at least one dose and 49.3% are fully vaccinated. good news.
Sure is. Each vaccination is just one step closer to easing restrictions in New South Wales, Victoria and the ACT and reopening domestic and international borders. And we all want that. The benefits of vaccination are also clear in the hospitalisation rates. Non-vaccinated people make up a disproportionate number of people going to hospital. Unfortunately, the case numbers in Victoria do continue to rise. 766 new cases yesterday. That's the highest daily total since the start of the pandemic. And there were 4 deaths. Melbourne's northern suburbs, that's still the problem region for the pandemic in that state. The good news for many Victorians stranded in Sydney, though, is that they will be able to return home from September 30, provided they're fully vaccinated. But they will have to quarantine for 14 days. New South Wales recorded 1,063 new cases yesterday. It was the 90th day of lockdown for that state. 6 people died, taking the toll from the current outbreak to 266. 84% of the state's population now has had one jab. ACT recorded 16 new cases. Meanwhile, Prime Minister Scott Morrison said Australia would share another 20 million doses with the region. Now, I'm not sure, Michael, what share means. Presumably, he's saying we'll donate the doses, but I'm not really sure.
What, you're saying a politician isn't saying exactly what they mean?
Surely not.
Most curious. Now, billionaire retailer Solomon Lew, whose group Premier Investments was a big beneficiary of government support during the COVID pandemic, has called for compulsory vaccinations and temperature checks for people entering shopping centres.
Exactly. He thinks everyone entering a mall should be checked then at the front door rather than when they enter shops. And if you're not vaccinated, you don't get to come in. As he said, who wants to sit next to someone in a food court if they're worried they might have COVID? He was speaking after announcing an almost doubling of full-year profits to more than $270 million. Now remember, Solly Lew and Premier had quite a fight with landlords last year, refusing to pay rent during COVID lockdowns, and then was highly criticised for taking the JobKeeper payments, notwithstanding how much money it was making. Eventually, it was pressured to give some of that back. Premier includes stores like Smiggle, Just Jeans, Portman's and Peter Alexander, which actually was a standout performer. Perhaps that's not surprising given pyjama fashion is much more relevant during lockdowns than at any other time.
Pyjama fashion?
Have you not picked up new pyjamas, Michael?
I actually have. I wasn't going to admit that. Have you?
2 pairs.
All right, let's leave that one alone. The corporate watchdog has warned against pump and dump schemes. There was actually one earlier this month when a tiny gold miner, Australasian Gold, jumped more than 80% in 20 minutes. Sean, for the uninitiated, what exactly is a pump and dump scheme?
Well, it's exactly how it sounds. Investors buy a stack of stock, go to investor websites and social media feeds, at best promote the stock, at worst actually tell lies about it to push its price higher. Then once the price rises, they sell out, making a tidy little profit. The Australian Securities and Investments Commission isn't happy. The regulator warned that punters using social media to ramp up stocks face jail time, and they deserve it too.
Now, I mentioned the one that happened earlier this month with Australasian Gold. Does it actually happen often, though?
Well, it's happening more often. In fact, there was a case yesterday. Aura Energy is the stock. It's been suspended from trading. It re-entered the market yesterday. Its share price went from 0.3 cents to 27 cents. That's more than 8,000%. It had been on pump and dump websites ahead of the relisting, so it's a pretty good example. It is criminal behaviour, and I hope ASX throws a book at them.
Yeah, that's extraordinary. I completely agree with you on that one. And what's the story about a massive cable link between the Northern Territory and Singapore to provide clean energy?
These stories amaze me, not just the numbers, but the science behind them. It's beyond my realm of understanding. So the Indonesian government has backed a plan known as the Australia-Asia Power Link to build a 4,500 kilometre underwater cable to deliver energy to Singapore from Australia via Indonesia. It involves a massive solar farm near Tennant Creek in the Northern Territory. That farm generates renewable energy, which will be exported to Singapore through the cable. There'll be massive batteries to ensure reliability of supply, and the whole thing will cost around $30 billion. It's backed by Andrew Forrest of Fortescue Metals fame and Mike Cannon-Brookes from Atlassian. Now, those two are the 2nd and 5th richest Australians, so they're putting their money where their mouth is because they're both great supporters of the environment. It will be the largest renewable energy project in the world. Still a way to go, but wow, good luck to them.
So, Sean, what's making headlines in today's news media?
The media this morning is reporting that Treasurer Josh Frydenberg has thrown his support behind the adoption of net zero emissions by 2050, warning that unless Australia moves, capital markets will penalise the country, pushing up interest rates on everything from home and business loans through to infrastructure investments. And there are plenty of tributes to John Elliott this morning, the outspoken, mostly politically incorrect, larger-than-life Melbourne businessman who lost a fortune, who at different times was boss of the Federal Liberal Party and chair of Carlton Football Club and made Foster's Beer a global brand. Vale.
Running through some of the other stories around today, Energy Australia will bring forward the closure of its Mount Piper coal power plant in New South Wales to 2028-29. It's part of the group's efforts to reduce its carbon emissions. Earlier in the year, it brought forward the closure date of its Yallourn power station in Victoria.
Prime Minister Scott Morrison said the US Congress had given overwhelming support to the AUKUS Military Intelligence Alliance, my favourite acronym this week, AUKUS. That's the alliance between the US, UK and Australia. He certainly is one happy PM at the moment, Michael.
Certainly is. Now, News Corp's share price jumped more than 7% after the media empire run by Rupert Murdoch said it would double its share buyback program. When companies buy back shares, earnings are spread among fewer shares, hence the price rises. The group is also on the lookout for acquisitions. News Corp has done well, and its share price is up 75% since late October.
It really is interesting how News Corp and Nine Entertainment, those old media companies, have actually been some of the best performers over the last 12 months or so. Brickworks, which makes bricks, said sales had fallen 80% as a result of the 2-week snap lockdown imposed on the Victorian construction sector. Now, while demand for tiles and bricks in non-lockdown states grows, it isn't so good in New South Wales or Victoria. The group announced a 20% drop in profit for the 12 months to the end of July yesterday.
Brickworks. I love a company whose name tells you exactly what it does.
You do. So this next story, which I think you're going to tell us about, is Bureau of Statistics, which probably meets that criteria.
It certainly does. So the Bureau of Statistics is one of my favourite bureaus. Now, the figures from the Bureau show that household wealth rose by 5.8% during the June quarter, hitting a record $13.3 trillion. That includes property, superannuation, investments, and all kinds of assets. Of course, it does make sense that the rise was mostly because of soaring house prices.
Exactly. And just a quick one, Michael. Canadian giant Brookfield made a $9.6 billion bid for energy group AusNet Services. We've spoken about that in the last couple of days. It was granted exclusive due diligence. APA Group then came in and offered $9.9 billion more. But of course, it's locked out of due diligence. APA yesterday went to the takeovers panel saying it should be allowed to get a look at the books. That's in the best interests of shareholders, according to APA. So that one is a fight in the making.
All right. Now, what's the key overseas news this morning, Sean?
US President Joe Biden has called on richer countries to expand the production and availability of coronavirus vaccines and treatments. He wants 70% of the globe to be vaccinated by this time next year. Ambitious, I'd say. Of course, at the same time, the US is also pushing that people over the age of 65 get a third jab of some of these vaccines. So on the one hand, they're saying everyone should actually help the poorer nations, and on the other, they're pretty much looking after themselves. And the World Health Organization has recommended tighter limits for air pollutants. Air pollution is the world's 4th leading cause of death, mostly because gases and tiny particles travel into human bodies, particularly lungs, and can enter bloodstreams and cause damage to cells.
Now, up next is the Daily Interview, and today, Sean, you're talking to Michael Pillemer, the Chief Executive of PPS Mutual. The life insurance industry copped an absolute hammering in the Banking Royal Commission, so I'm looking forward to hearing what Michael says.
Yeah, he's an interesting interview because Michael talks about the sector in a way that I haven't thought much about it, in sort of reinventing itself, actually almost rising from the ashes. It started before the Banking Royal Commission, but some of the dreadful stories out of that commission brought to life some of the things that the industry was doing. So, yeah, it's well worth a listen.
Yeah, absolutely. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael. Have a great day.
It's Friday, the 24th of September. Thanks for your company. Make sure you're following the podcast so you get it every morning, and join us online on Twitter, LinkedIn and Facebook. I'm Michael Thompson, and that was Fear and Greed. Enjoy your day.